is Sunday the 31st of January 2020. I'm having a look at the major currencies, and I'm starting off here with the US dollar index, and really just discussing at this point in time, although we are still sort of technically in an uptrend, we've got high lows, high highs. We haven't really broken above 91. We haven't broken south of $90 yet. We've actually stayed within the last week's candle, which was a bearish candle. So I was looking for last week to see a break below this to see if that trend was going to continue. And in fact, I think that's still going to be on my plan for the coming week to see if we do break to the downside. But really what this does do is just add to the general indecision. And so my immediate thought is that there is actually a really fair chance of range-like behavior that could continue to be the case this week, and so that's going to make it incredibly difficult for traders to make money trading on any of the majors during intraday timeframes until we break outside of that range. So looking at the euro dollar here, this candle is slightly more bullish than bearish. It's still an inside candle, and so yes, there is a potential if we break above the high of this, both the high of last week's candle, the week before that as well, the week of the 18th, then I would like to see and expect to see that continue to strengthen and head back up towards that 1.23 level. Obviously what this means is until that really happens, I expect that sideways behavior to be more of the case. Even here looking at sterling against the US dollar, it's 5 or 6 or 7 candlesticks, all pretty much in the same direction. So that's made it quite tricky for intraday traders, although the drift is generally higher, and I would expect now that we've broken through 1.35 that we should be able to head up towards 1.4. So we are also, you'll notice here that there is some slight resistance here below these candles over here, so we are in that area. But I am leaning towards, although we have range-like behavior, I'm still leaning towards a slightly weaker US dollar. In the meantime, the Australian dollar against the US dollar has had a nice, healthy weekly correction. It's still struggling with that 77.50 level for resistance. What I'll be looking for this coming week is a nice little bullish candle, potentially a move back up to that if we do indeed get that stronger Australian dollar over a weaker US dollar. And I'm just noting the monthly bearish candle, which looks like it's pretty much going to finish that way. So we're going to be into February this week, and so potentially if we do then alternatively break the low of this candle, we might then see the Australian dollar weaken, coming back down towards perhaps a weekly level at 73.50. So if that's going to be the case, there'll be some shorting opportunities on intraday levels. Then looking at the New Zealand dollar against the US dollar, we have technically created a swing low. We do have an indecision candle. So the point of this being that the market attempted to go higher and has now finished unsure of itself. And again, that is right below a monthly level of support resistance. And actually, this is now an indecision candle. So it is now a very real possibility that price could break the low of this, and this could become a swing high, and we could see the market head low, which would see that it heads down towards 70.50 or perhaps 68.50. So that's interesting because that actually supports the idea not of a weakening US dollar, but potentially a strengthening US dollar. Dollar yen now is broken back up above 104.50. You can see here it now looks as though it's doing a retracement. Certainly it's feasible for it to head up towards 105.70 or 106. So that is a possibility if it stays above that. So that is hinting actually at a stronger US dollar. Then looking at dollar Swissy here, that you can see there's a clear area, a resistance sort of band. If we break through this, I think it's very likely then we're going to continue up to 0.9, which then supports the idea of a stronger US dollar. So we're getting a mixture of things here. We're getting the potential here for a weaker US dollar on Euro GBP, but on all the rest so far, we're actually getting a hint at a stronger US dollar, at least that those markets are leaning towards giving way to the US dollar. Looking now at dollar CAD, we're in an uptrend on the daily, higher lows, higher highs. We've got a potential bullish indecision candle here, so we could see price head up towards 1.3, but actually on the weekly, we're just largely going sideways. So look, what I take away from all of these is that range-bound behavior and uncertainty are on the table, which means intraday traders are going to have to be incredibly cautious and perhaps more patient than normal, waiting for those setups to be to set up clearly, because there are no clear trends in place at this point in time, certainly not until I think that dollar breaks either side of the weekly candle. But interesting enough, there's a little bit more evidence here hinting at the potential for a weaker US dollar. instead of a stronger one, which is, sorry, I beg your pardon, the other way around. What's wrong with me? A stronger US dollar instead of a weaker US dollar. So that's going to be interesting. To me, that does actually mean that if that is the case, Euro and GBP will actually head lower, as well as Aussie and Kiwi, and dollar yen, dollar Swissy, and dollar CAD will potentially climb high. And I think dollar Swissy is a key one to watch. I think as soon as we break above that band, which is sitting at 0.930, we're likely, if we get a solid break above that, we're likely to see that, and that'll be a potential clue that the dollar itself is weakening, and it isn't just the Swiss franc. That's really it in terms of the majors for this week, and obviously trading with some caution there. I don't expect right now, I don't see a lot of immediate opportunities, which does mean that for intraday traders, it's going to be higher risk and potentially more trading losses this week until those trends reestablish themselves.